We are in the last couple days of November. Jeez, it's crazy that we're already over halfway through Q4. Big stuff coming up this week. There's a couple things that kind of stick out as the FOMC minutes come out tomorrow evening. Not that it's going to be the biggest deal, but it definitely will kind of hint to what the expected interest rate decision may be going into the next decision. So those are always interesting to see the kind of like their internal notes and minutes about it. Other than that, Wednesday is probably the last big one of the month regarding data. So an hour before the New York opens, you're going to see core PCE. That's going to be a big one as well. You got some like final estimates for GDP and stuff like that, personal income, that type of stuff. There's going to be interesting as well, kind of like see how we finish out and round out the end of the year. But mostly the thing that we're looking forward to is the fact that it's Thursday. Friday is a holiday in the U.S., or at least Thursday is with Thanksgiving. So there are some reduced hours from the New York Stock Exchange. Generally speaking, and from my experience, most people in the U.S. who can take off do take off the full 4-day weekend. Uh, Historically, and I'll go through it, but last cycle on November, since we're actually timing it up like literally 4 hours from one cycle to the next, or 4 years, excuse me, 1 year, one cycle to the next. Uh, Bitcoin saw a 17% dump Thursday, Friday, kind of during that period going into the November stuff, which wouldn't be the worst thing. And I'll go through that. But if you're going to look at anything, like I said, FOMC minutes, and then obviously core PC is going to be a big one on Wednesday. So expect some volatility pre-market there for sure. Looking over Bitcoin, just wanted to show a bit of a higher here on the long short ratios. We actually got a little bit strained because we saw a lot of people aping long last week and then over the weekend, pressing the green button. And then as of basically earlier this morning, as we started seeing a move back up, we were breaking down a little bit, doing some retracements. We started seeing that long short ratio coming back down. Just within the last hour, we've now starting to see, some aggressive longs really flipping and coming in pretty aggressively. Like a 2% change is pretty significant, I would say, overall. But it's still generally bearish, which is good. The majority of people that are shorting this or missed the big move up, those who have missed it are trying to short it back down. And as long as they're continuing to short, it's going to continue in the upside direction. That being said, we're super maxed out on a lot of different metrics. We're overdue for a correction, overdue for some retests. And I would not be surprised if we had to consolidate before 100K. But for the time being, it looks like we're doing a bit of a dump across the board, but we'll go through that. Just watch this. We're seeing some aggressive longs to try and break through. I think that if we're going to flag out in some area, it'll be right here. Finally, going over to the open interest funding rates, we did have a bit of a breakdown, and we're actually still quite bearish. So pretty significantly bearish funding rates, especially for the big one that I always look at is BitMEX. That's kind of a big determining factor when I look at it. But 0.049, which is crazy high across the board, it's crazy high. So just remember that it's a significant thing. Looking at the heat map too, just because we're a little bit overheated, but let's think about this on like a much higher time frame. This is a great little way to see like what's overheated and where. So when you have those kind of like first little peaks, you'll start to see that it's a bit overheated, kind of like where we are now. And then going into like, last year, right, we started seeing a pretty big increase around this time of overheated markets before it started cooling down. There's a nice cool down period where we had some good continuation through December. And then again, it was like really overheated again going into the first of the year. Until we start getting really significantly overheated funding rates across the board, I think it still looks good. If you're looking for this, like just look at the time frames. In March when we actually started seeing the first failures, right? We saw it was super overheated, and then it did one final leg up, and then by that point, then we ran into the 8-month sideways. So it still looks fine as far as I'm concerned. Still likely to go higher. Liquidations. So in the local stuff, there is a lot of stuff stacked at 100K. 100K is also getting heavily defended. If we do start having a further breakdown, like I know we're breaking down now, let me just adjust this to the 3-day so we can see the local price action. So we're seeing that kind of like local breakdown. If we hold the low now, like we actually come back down and hold the low, and we do another, basically from that point, we would be doing a higher low from the low that we did from yesterday, from the Sunday price action. I think there's a good probability that we pop into this liquidity. It's looking pretty attractive on the higher time frame as well. I think it wouldn't be the worst thing in the world. The one thing that kind of sticks out that if we're going to have some type of major changes, especially with that high we just popped that actually broke some previous high stuff, as long as we're holding that low, I think it's good. If we do start ever breaking the 96K low again, I would expect this to flag out and do some larger downward structure, probably in the realm of like 89k something, 90k if we actually get back down there, which would be good in the long term, a nice correction. But we're seeing some pretty significant down moves in the last couple hours here. And then finally, sorry for the big switch on it, I know it's really bright, but looking at the COT, the Chicago Mercantile Exchange report, in general, it's all green, still good. No major adds to longs. They're riding it out, but they're also not closing positions. This was as of Tuesday last week, which I'll show again on charts so you guys can see. The one thing that sticks out to me is the fact that you see massive increases in spread. They usually jump the spread up quite a bit when they're looking to flag out and go sideways, or at least that's the expectation. So with that, I'm going to switch it over to the charts and we'll go through liquidity and some stuff, and then we'll go from there. Right. So looking at the chart here, just looking at some liquidity, the high leverage stuff is the 100x, so the orange, yellow is the 50x's, that type of thing. The big thing that we want to get into is that liquidity. There is short liquidity above us. It's definitely viable. There is some stuff to the downside. There's some high leverage longs below us and below the low. The problem that we start running into is that if we just come back down and grab that 100x stuff and then reject, bounce there, that's the perfect bounce to break us back up to retest the high structure, potentially even a breakout higher. Creating new lows under this 96k zone, this starts to become problematic. I think if we do it in one move, we get a bounce at a dead zone down here at 94, and we'll get a bounce back into the move. But now we start, kind of farming out that kind of downside flaggy structure. I don't think the upside's broken, and I don't think that there's a lot of we could actually do to break the upside. For me, you'd have to lose 89.9. Like, this is the big level in my book. As long as we're holding that, even if we do a much bigger retracement, we're looking good. If we lose that, we're going to do some really nasty snap stuff, probably sub 70k. That's worst case right now, since I still think we're aiming higher. I think the trend is still good. We were parabolic, like fully parabolic to the upside. And then instead of dumping through that move, we did an initial dump and then we just did a sideways grind. So this is actually showing a lot of strength, because the average parabolic move that goes like this, you expect it to have pretty significant breakdowns of price and structure. And we're not seeing that, which is good. So on the liquidity side, it looks pretty decent. If we go on the TA side, let's go through some of the levels here, so we're all on the same page. So key levels, the big demand structure, or the big swing structure above us, 98.9k, that daily open from, I guess it was Saturday. Really bad close. So on the higher time frame, if you look at the daily time frame, you'll see that 98.9 is definitely the level to gain above. If we do get above this, I think 100k is super probable, super likely. We're seeing some massive steps off right now, some big boy rejections up this big 4-hour supply zone. Kind of to be expected, in all honesty. We'll see how the price reacts at the lows. If we just hold the low and then farm out some bigger structure, we want to start round bottoming it and gaining some levels. But for right now, it looks like it's running a little bit flat. Watch those key levels. The break that breaks stuff is 90, call it 96k. That loss, any close under this, and we start to look for a bigger breakdown into liquidity below us. So it was the first significant breakdown. It happened over the weekend, since we had this big chug up. Major resistance levels, again, Thanksgiving on Thursday. The last cycle, it did dump 17% between, I believe, Wednesday and Thanksgiving 4 years ago. So it is a pretty significant potential volatile thing. Just because there's less traders and lower volume doesn't mean less volatility. So yeah, just like I said, watch for potentially flat and sideways, and we'll go now into looking at ETH and stuff, just because yeah, they're seeing a little bit of a dominant shift, which is cool to see. So with that, I know I got a lot of stuff on here. Just want to look at like the higher time frame, really, just to kind of reiterate what I mean by, with the metrics kind of showing similar stuff. So around about the same time last cycle, or the last bull cycle, we were seeing like pretty overheated stuff on the Wave Master. We're getting into that overheated area now, right, on our chart, where we are in the current upside price action. On the capital flow index, it's almost exactly the same. Like, we had a move up and then we had a bit of a breakdown. Here it's broken down a little bit harder. And retail stablecoin demand roundabouts in the exact same spot, maybe even a bit more overheated. But in general, it still looks pretty decent. It looks like it has plenty of room to run on the higher time frame. And again, for this to really start to fail much higher time frame, we want to see, the weekly structure start giving us some trend changes, like that initial dip that pops a trend change, and then all the price action after that, once we get a trend change on the weekly, is divergent. And once it's divergent, then we know that we're actually looking for a top, or at least a local one. And when that when that trend change comes in, and the price is going divergent to the structure of the indicator, then we're looking at alts, because this is usually the time where you start seeing the alts doing their big runs. So just throwing that out there. Looking across the board now, we'll go to just local stuff on Bitcoin. Pretty cooled off on the lower time frame. We started a little bit of trend change, so if we can get that hold on the level here, it might actually look pretty decent. Retail stable coins come down to the midline. Stablecoin growth is also arcing down, so we got a little bit of cash flow coming out as well. But again, nothing super significant yet. We saw the beautiful one was over the weekend. We started seeing, trend change, cash flow going out, and basically just a continuation of the capital flow down. So it's doing what it's supposed to do, which is nice. We'll see if we get that nice low of swing hold, 96.2, 96.3. See if we get that hold level. If we do, we want to see it run back up to test stuff. But like I said, any new lows there starts to break some things. It's not the end of the world, but then we start running potentially to look at flagging out and having to build liquidity for a longer period of time. Anywho, with that said, I'm going to switch over to some of the ETH and alts, and we shall go through that. I think ETH is doing very well currently. Right. So ETH has come up to our big level. I mean, we basically flagged out into the upside. I thought we were going to break down further. We didn't. We actually held the low going into Sunday and over the weekend. It looks strong. It's got some bearish divergence, obviously, since the oscillator's been breaking down and this thing's been popping up. It's probably overdue for a bit of a correction. But for the time being, we have to play the price action. The price action says we're probably going up. We're at the big resistance point. We're above the Q3. This is a pretty significant level higher time frame in my book. Getting above this and anything that gets us above Q2, because this is the last big pocket of major resistances until we start talking about significant chugs up to 4K. And I think once ETH gains 3650, I think 4K at that point is priced in as a predetermined fact, like that it's going to happen. So still looks good, still looks strong. If you're looking for like some quick stuff, if Bitcoin does do a bit more of a pullback, watch the Q3 as a failure point to come back down towards the daily weekly. That's just free money. If you lose the Q3, you're going back to the weekly. As long as you hold demand here, you look good. If you lose this demand, I would say you're probably targeting back down to the lows, which means you're also looking at Bitcoin probably doing a similar move, breaking back down towards 93 or something. But for the time being, like I said, you're still gaining levels. You're making higher highs and higher lows. You are still trending to the upside, much more attractive right now than the Bitcoin price action. So ETH looks better. Looking over to let me see some metrics here. So ETH dominance is very, very up on the day. Bitcoin dominance down, and stablecoins up. So we're seeing a big rotation here. That's all it is. For the people who don't know what we talk about when we talk about rotation, generally speaking, the market goes for crypto we use the acronym BEAMS. Effectively, you have to have Bitcoin go first because that's the vast majority of the market dominance, the market cap of the entire crypto industry. And so you get Bitcoin going first, and now we're seeing ETH is actually doing a move, and we can see that based off dominance. We'll see if it's a real one and if it continues to flow into alts and then like microcap shitties. But generally, you'll get that full rotation in the next couple of months. So I think by beginning of the year through March, we're probably going to see an altcoin season run pretty similar to what we saw 4 years ago. And it seems to be following the exact same like date timeline in a weird way. And then once the whole thing runs and everyone's sucked everything out of the market cap as they can, people start exiting back to stable coins, and then you hit a big mid-cycle retracement period until everyone gets back into Bitcoin and then runs it up for the blow off. And that's been the typical cycle. That's what we have to assume is going to happen based off the evidence. And that's just at least what we're seeing now. So for the time being, you're still looking at gaining levels and going higher at each point. You just want to knock out some of this local stuff for ETH. That's kind of holding you down. Looking over to TradFi. Let's look at TradFi. Looking at the NQ, the trading on the normal side. Nice big bounce up. Watch this 4-hour close. We're actually seeing trend change back up, which is looking good. We were talking about how we're expecting this to hold to go higher. Regaining 21K is new highs, very likely. At this point, for us to have any significant breakdown, you'd have to lose 19.9K. November. There you go. So until you start losing this stuff, it's all looking like it wants to have a continuation. The higher time frame, it can be as oversold as or overbought as it wants. It's going to continue until we actually break something. On the trading side, we are actually coming back up and testing the levels. This move up was pre-programmed as of Friday close, right? We did the gain of level, our major trading side level gain. Open was strong, retest of the supply zone exactly as expected. So until we start breaking back below these levels, the stuff that we gained, you're still looking for this to squeeze through this potential resistance. Again, if you did get any of these longs, these higher lows, it's a bit grindy, but this is definitely a take profit, at least on something, to make sure you lock something in if we do reverse. On the ES side, popped a new all-time highs, I think, on the open. Yeah, so we popped it and then just ran it up to new all-time highs. Looks like it's swinging back up aggressively. You know, you can't knock something that's making new all-time highs. Back above 6K, wild. Still looks good. This move was pretty much pre-programmed from the Friday close. So it looks strong. Gained the level there. Continued to new all-time highs. On the trading side, we didn't quite pop it, but I'm more interested in the index on that side. This still looks good. You know, we're getting a bit toppy, but we know these moves up with the ES, they can just fully run, and it can be wildly divergent. So I would say everything's here a continuation. Even a test of the weekly is a continuation. You'd have to test and lose, like bearishly retest the weekly open to get me to want to short it back down to like 5,900. Other than that, every level is a potential buy until we break significant structure. So for the time being, everything above the Q4 and Q3 looks good. You'd have to, from here, you'd have to lose the November open to break structure really significantly. And finally, going over to the VIX, and then we got what do we got left? The Dixie. Turn these off. So the big thing here with the VIX, we were talking about how, you know, 2 weeks ago, we were saying that it's overdue for corrective move back up. We did get the corrective move back up. Nice retest of structure, and then big boy failures, gapping down. We want to lose the low now. So this is good. We look to be downside trending on the VIX, which is good. We want downside trending, you know, at least for a couple of months. Get this thing back below 10 eventually. But it's not going to be an easy dump, I don't think. I think that at the end of the day, we want to lose the low here at like 13.5, 13.5. If we do, whatever we do, I mean, it's pretty much confirmed that we're just going to have a continuation of that move. What breaks stuff on the VIX is anything that gets above that, any pop above 23, then the party's over. But I would say, you know, even now, getting over to like 19.4, that would be kind of a panic mode. Like we get a big cycle flush out. But for right now, it looks good. Volatility's decreasing. Everyone's happily going and continuing into the upside, or at least that's the expectation. Look at the dollar currency index. You know, we've had this continuation move up. We've talked about how strong the dollar currency index has been. We've broken the new high. We broke it on Friday. We even closed above like the previous high from September of last year. So we went to highs that we haven't seen since November of 22. So remember, like even back in November 22, like we were basically collapsing into the bear market pretty badly or pretty painfully. The difference there obviously was that first major breakdown at the beginning of November is what basically said we're at the bottom across the board. We're seeing a little bit of a, you know, irrational market in the sense that the Dixie's pumping at the same time as the markets are doing well. That means not just a resilient market, but like, okay, if this thing's trading correlated, we want to see what happens when this thing finally breaks down. It's been wildly divergent for a bit, even high time frame. It's overdue for a bigger break back to the downside. And I think once the dollar currency index breaks down, we definitely want to see losses of 106.1. If we get that loss, we're actually losing daily time frames and levels. And then we want to see a bullish reaction from the market. If the market starts reacting poorly from the dollar currency index dumping, yeah, that'll be a pretty strange one, since they generally, or for the vast majority of the time, it trades inversely correlated, or at least loosely inversely correlated to the market. So keep an eye on it. I'll see what happens with it. I'm hopefully we're going to get some type of dump on the Dixie that actually leads to a continuation of the rest of the market. But for right now, we're seeing a bit of a flush out across the board on Bitcoin as we're kind of nuking into that open. So that's the general market update. And yeah,